Good afternoon, everyone. Thank you very much for logging into our masterclass. Today, we're going to talk about financial protection and really about how protection needs can be addressed for expats and what are the different options available for someone who's living over the seas. We'll sometimes concentrate on Singapore, but in general, we'll be able to go through what's available. My name's Andrew Talbot, and I work for Global Eye, and I'll be your host today. So the first thing to look at is what is protection and why do you need it? And it can be put into place to protect the family, yourself, and to a certain extent your employees. And some risks are best managed, while others are best insured. Things to think about are loss of earnings due to an illness or an accident. The risk of being off work is much greater than death, and no one will be able to predict when you'll be off work or when an accident or how long it will last. Therefore, protection is needed unless it's provided by the employer. Just a quick stat: for every individual of a working age who dies, 14 have been off work for more than 6 months. So being off work and not having protection is very important. So to find out whether or not you need it, there's a quick test where there is available on Facebook. And it's called, there's the link there, How Invincible Are You? And it's a quick couple of questions, and at the end of it you get a nice answer to say whether or not you think you need it. So it's worth just having a quick look at it. Some of the questions they ask are pretty straightforward, such as, it looks like this: do you have a partner, or do you own your own company? How much money do you have saved? Do you owe any money? So have you got any liabilities? And how much do you spend on food shopping? So it's asking you, look, what's your expenses likely to be? How much money do you have in your accounts? Are you the breadwinner? Is it all on you? Is everyone dependent on you? And at the end of it, you get a nice little graphic and a quick summary to say, for instance, this one, safety net looks a little threadbare. So what can you do? Is it worth looking at protection needs? And the really thing is, you're looking at risk, and risk is different. There's different types of categories, and it really depends on the severity of the risk and the likelihood of that happening. And some events are likely to occur often, and some may not happen very often or at all, but when they do, the impact on a person's life could be immense. So if you look at someone at age 37, there's a 10% chance that they're likely to have a heart attack or a stroke before the age of 65. But the life expectancy is 86 years. So you're more than 1.5 times likely to have critical illness than you are to get knocked over by a bus or to die. So the occurrence of that is far higher than death. So it's just working out what the risk is. And also whether or not you have dependents or someone looking at who is dependent on your income or you in person. And so the cost of children and really the replacement of you is quite high. So the cost of a child is £231,000. Equates to a cost of £878 per month. So it's quite high. And that's from another insurance company. So the link is there, so you can see how much it is. And that's from age 21 until they fly the nest and they've left university and they've gone abroad. So they're dependent on you. The next section is to work out what steps you need to get your to find out whether or not there is a need to get your financial protection in order. So the first thing is identify the main areas that need cover, such as loss of earnings, protection of your family, liabilities, mortgages, other debts, asset protection. Do you need to sell any assets in order to fund future lifestyle because you're no longer working. And then also business protection. So if you're an employer, you have a small business and employees are dependent on you for their livelihood, then it's worth looking at different types of protection. It's always worth having 3 to 6 months expenses as emergency cash, and this should be liquid in an account that you can get access to. So if you lose your job or you're in hospital, then you should be able to access this cash. And then you're looking at access to investments or liquid assets. How quickly can you sell these should something happen? So if you have your main asset's a house, it will take a long while to sell that house, and it really depends on what the market is, where it is in that cycle, and whether or not you'll get what you're looking for. And then the other thing is company schemes. So if you're employed, what does your company offer? So it's worth checking out what they have. So check your company benefits, and you probably would have had health insurance in place and some degree of contract stipulation that will say I'll pay you 6 months full pay or 6 months half pay. And then also there tends to be 1 to 2 times critical illness cover. So this is 1 to 2 times your salary on the diagnosis of an illness. And then there's 3 to 4 times death in service. So if something was to happen to you, then the company would probably pay the named beneficiaries on your contracts, and it's always worth checking what those named beneficiaries are. 3 to 4 times death in service. But remember, if you leave your employment, then you lose all of these benefits. And if you're suffering a critical illness and you're forced to leave employment, then it's likely that your benefits will be forfeited. And also, if you've had a serious illness or a serious health problem, then when you come to take out insurance, the company may exclude this or not offer you the cover. So it's always worth just checking what your company benefits have. So what areas do you need as an expat, and then what's available? There's 4 main types. First one is health insurance. Second one is income protection. Third one is critical illness, and the fourth is life insurance. They're the main areas that is available in the marketplace, and the areas that really should be covered. If we start with health insurance, that will just provide you the cost of your hospital bills should you be staying overnight or surgery or anything that goes with it. And that's really, in Singapore and other expat destinations, the cost of healthcare tends to be private, and it can be very, very expensive. There is no state benefit here. It's worth seeing whether or not you pay direct or you have to claim it back. So if you pay direct, then your upfront costs for being ill are very low, but you have to claim it back, then you have to fund that surgery or that cost of maternity beforehand, and then you claim it back from the insurance company. And it's also worth looking at the coverage. For instance, maternity, generally up to 2 years deferred before you can claim off it, and you may not be able to claim off outpatient or physio or alternative medicines. So it depends on the health insurance plan that you have. And then also it's worth maybe looking at what your company has and whether it's worth having a top up to this. So if your company scheme says we're only going to pay you up to $10,000 or $20,000 on a particular claim, then look at a health insurance and whether to top up. So if you have a catastrophic event that means that the bill is $100,000, then you know that your health insurance will cover the cost of that. Not all health insurance is the same, and they don't necessarily cover everything that you may think it does. The second option is income protection. It's often thought as the forgotten insurance or forgotten cover, and really it covers the fact that when you're not able to work, it will provide you an income. And I mean, there's lots of statistics that show that if an individual is off work, then they're 5 times more likely to be suffering an illness or incapacity than they are to die. So it's worth protecting your income. That generally tends to be people's biggest risk, is the ability not to earn money in the future. Income protection is normally based on your own occupation or any occupation, and So it's worth looking which one you can do. If you're in a really specialized job, then you really should look at own occupation. If you work in an office and you could have transferable skills, then any occupation can make a big difference. Tends to be a limited timescale in that the insurance company will pay out an income for a set defined period or up until a point where you are at ability to go back into employment. And that could be any employment, not just your own occupation. And it covers expenses rather than salary. So it tends to be 2/3 of the monthly amount rather than your full salary. So it's worth checking really what it covers. And third option is critical illness cover. And this can be complementary to income protection, and it can cover to a certain extent the same type of illness, but it provides a lump sum rather than an income. And it's generally on the diagnosis of that illness, and it will go into whatever account you designate, and we can use for whatever you want. It's not necessarily used to pay for hospital bills because your health insurance will cover that. But can be used for paying off mortgages or loans, making sure that you've got enough income for a year to do something that you've always wanted to do. So we tend to set it as sort of a year or 2 years salary as a level. And then the fourth option is life insurance. Not everyone needs life insurance, but I think if you have children, a partner, or other relatives who depend on your income, then it's really important to look at whether or not you have this cover in place. There's two main types. One is a set term, such as 10, 15, 20 years, and a mortgage term, or kids are at university. And the other is a whole of life policy, which will pay out no matter when you die. And this could be used for legacy planning, or paying inheritance tax or estate taxes. There's different options, and it's just working out whether or not the one that fits in for your needs. So if we do a quick calculation, and because it should always be on need rather than a rule of thumb, such as 10 times annual income. The first step is to identify whether or not there is a need. So is your family dependent on you? Do you have employees? What happens if you weren't there, or your income wasn't there? The second step is to quantify how much you need. So how much does it cost to pay off the mortgage? How long do you need to, how much do you need to provide for the spouse or the children, or do you need to change countries or return home? And the third step is to work out how long that should be. So is it until, how old are your children? Will they go to university? Will they be after university? Do you need it to go up to retirement? At that point, most pension plans tend to kick in, and it's worth having other policies in place. And then the fourth option is you take into account of any existing schemes or policies or pension schemes, other assets, because they could be used to provide degree of income. So if you've got a couple of properties that provide income, then you pay off the mortgage and that income is unencumbered. So it's worth looking at what you have. So if we do a quick case study, and this couple walking along the beach, Mr. Smith, 42 years old, he's married, he has 2 children. So what are his protection needs? Well, he has a mortgage, he has a family to look after, his children are likely to go to school, and then they're likely to go to university. So those are the quick summary of what he has. If we look at the mortgage, it's quite low, 200,000. I assume that's not in Singapore. And his monthly outgoings, we've kept it quite low just to keep the figures fairly simple. And the same with school fees. So we said 5,000, which is not in Singapore, that's for sure. And there's 2 types of cover that we look at, an ideal and a minimum. So the ideal is, should something happen to me, everything is taken care of. I have no need to worry. And then the minimum is really, well, what do we need as a basic level? So if you took an income level, the minimum, say for this person is I want to provide 30,000 a year, could be a month, 30,000 a year, but ideally I like to go to 60. And then the home for your family, a minimum would be say 200,000, with the ideal cover. In this case, it's exactly the same because it's just paying off a mortgage. But if you wanted to buy a house, you say, well, I need to buy a house, so it's double that. And then the school fees are the similar scenarios. Do I want the family to go to private school, or are they happy just to go to local or state school, depending on which country you come from, whether or not that costs money? And the same with university fees. Cost of university fees vary throughout the world. So the US is obviously very, very expensive compared to other countries, although they are all catching up by the looks of things. So if we add all of this up, you can see that he needs $1.3 million or an ideal cover of 2.4 million. And then critical illness tends to be either 1 times or 2 times salary, as we mentioned earlier. So the possible options from the minimum amount of cover. So these are the different costs. If we put them all together, then it'd be 166 a month, plus the life cover, the critical illness cover. And then if you want income protection, it'll be the same. If we did the same with the ideal levels, then you can see that the $2.4 million, the cost has gone up. 240,000, the cost has gone up. Income protection is still the same because those are the expenses. So you can see how the differences happen. It's really down to need, the individual, rather than as a rule of thumb. So in summary, 4 types of insurance. There's life insurance, there's IP, which is income protection, critical illness, and health insurance. And it should all be based on need. So you should work out the calculations and get to the figure that fits for yourself. And income protection and critical illness tend to be very complementary policies. They pay out in different ways, and they can cover effectively the same type of illness. It's just that they get paid in different ways, and they may cover different types of circumstances. So income protection will cover you for your income, but for a defined period, whilst critical illness will just pay you a lump sum that you can use for anything that you want to. But income protection may pay out for illnesses not covered by critical illness. So it's really worth looking at what it will fit in your individual circumstances. And then health insurance, very high priority for expats, certainly in Singapore, where really it should be, everyone should have it, as the catastrophic event of going to a hospital, even for a couple of nights stay, may make a great deal of difference to an individual's finances. And if you'd like a quote, email details to me. Details are on the screen. We need your name, your date of birth, nationality, country of residence, whether you're a non-smoker, and the amount of cover you need. If you're unsure about the cover you need, then we will be in touch with you, or drop me a line, and happy to set up a consultation to see whether we can go through your own individual circumstances and see whether or not we can help you with your protection needs. So thank you very much for attending today, and we're likely to be in touch.